Hey there, welcome back to my channel, it's me, the Mind Injector. Today, we're diving into a topic that might just blow your mind. What if I told you that having debt could be one of the most strategic moves you can make, whether you're already rich or aspiring to be? Yes, you heard that right. Debt, when used wisely, can skyrocket your financial success and wealth to new levels. Stay with me as we explore the secret strategies the ultra-wealthy use to leverage debt to their advantage. This is going to be a deep dive, so grab a coffee, get comfortable, and let's get into it. Debt often carries a negative connotation, but when used strategically, it can be a powerful tool for building wealth. Understanding and utilizing debt properly can unlock new levels of financial freedom. This video will uncover high-octane strategies that many of the wealthiest individuals use to leverage debt. One of the first strategies is taking a margin loan against your stocks. This involves using your investment portfolio, stocks, mutual funds, ETFs, as collateral for a line of credit. Your brokerage might offer a personal credit line or margin loan. If your account contains high-quality, stable assets, you might be eligible for a loan-to-value ratio of up to 60% or 70%. What's more, the interest rates on these loans are often quite favorable, especially if you have substantial investments with the lender. This means you can borrow against your investments, still retain ownership, and use the borrowed funds for other opportunities. All this while potentially benefiting from lower interest rates. Imagine having access to funds whenever you need them without having to sell your investments. This is a powerful way to maintain your portfolio while having liquidity to seize new investment opportunities. Real estate is another domain where the wealthy leverage debt to their advantage. The real estate industry has a highly organized financing system, making it easier to secure loans for property purchases. Banks offer structured underwriting guidelines that streamline the borrowing process. When buying real estate, you don't need to pay the full purchase price upfront. Instead, you can secure a loan to cover a significant portion of the cost. Later, you can refinance your property to take advantage of better interest rates or to pull out equity, which you can then reinvest in more properties. This cycle of purchasing, refinancing, and reinvesting allows for continual growth of your real estate portfolio. Real estate isn't just about owning property, it's about using that property to generate more wealth. You buy, you improve, you refinance, and then you buy more. It's a cycle of wealth creation that keeps on giving. Once you've built up equity in your property, you can leverage it further using a HELOC. This revolving line of credit lets you borrow against the equity in your home, providing flexibility to draw funds as needed and repay on your schedule. This is an excellent tool for financing additional investments or covering other expenses. The flexibility of a HELOC means you can access funds quickly for any investment opportunity that comes your way, making it a powerful tool in your financial arsenal. Here's a strategy that might surprise you: leveraging your whole life insurance policy. Wealthy individuals often use their life insurance policies as collateral for loans. This strategy involves taking out a loan against the cash value of the policy, which can be substantial if the policy is worth millions. For instance, if you have a life insurance policy with a payout of $10 million, you could potentially borrow a significant portion of that amount. The loan is secured by the policy's death benefit, ensuring that the debt is repaid upon the policyholder's death. This allows the policyholder to access funds during their lifetime without compromising the policy's ultimate purpose. This is a sophisticated strategy that showcases the depth of financial planning that the wealthy employ. It's not just about having insurance, it's about using every asset you have to its maximum potential. Now that we've covered some of the main strategies, let's delve into why the wealthy use debt so effectively. One of the most compelling reasons is the tax advantages. Debt isn't taxed like income or capital gains. For example, if you take a loan against your stocks instead of selling them, you avoid paying taxes on the capital gains. Additionally, the interest paid on many types of loans can be tax deductible, further reducing the effective cost of borrowing. Think about it. You get the money you need, avoid paying taxes on your gains, and get to write off the interest. It's a triple win. Wealthy individuals often use debt to fund their lifestyles. By taking out loans against their assets, they can cover daily expenses without liquidating their investments. This allows them to maintain their investment portfolios while enjoying the liquidity provided by the loans. It's a way to live comfortably now without sacrificing future gains. Imagine having access to funds for travel, luxury purchases, or any other expenses without having to dip into your savings or investments. This is how the rich live a lifestyle of abundance while their investments continue to grow. Arbitrage is another key reason the wealthy use debt. This involves borrowing at a low interest rate and investing in opportunities with a higher return. For example, if you can borrow at 5% and invest in a project that returns 8%, you earn a 3% profit margin with minimal effort. This strategy relies on having access to both cheap credit and reliable investment opportunities. This is the essence of making your money work for you. The wealthy have mastered the art of borrowing cheaply and investing wisely, creating a steady stream of passive income. Wealthy individuals also use debt for asset protection. By encumbering their assets with debt, they make them less attractive to potential creditors. Properly structured debt can create legal barriers that protect assets in case of lawsuits or other legal challenges. This is a way to safeguard your wealth and ensure that it remains in your control regardless of external circumstances. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. Let's look at some real-life examples of how these strategies play out. Consider a real estate mogul who owns multiple properties. They use mortgages to buy properties, collect rent to cover mortgage payments, and watch their properties appreciate in value. They then refinance these properties to pull out equity and reinvest in new properties. Over time, their portfolio grows exponentially, all funded by strategic use of debt. A tech investor might use margin loans to leverage their stock portfolio. By borrowing against their high-quality tech stocks, they can access funds to invest in startups or other high-growth opportunities. As these investments pay off, the investor repays the loans while keeping their stock portfolio intact and growing. This allows them to diversify their investments and tap into new markets without selling their valuable stock holdings. A high net worth individual with a substantial life insurance policy might take out a loan against the policy's cash value. They use these funds to invest in real estate, private equity, or other ventures. The policy serves as collateral, ensuring that the loan will be repaid from the death benefit. This strategy provides liquidity and investment opportunities while preserving the primary purpose of the life insurance policy. Understanding how the wealthy use debt requires a shift in mindset. It's about viewing debt not as a burden, but as a tool for growth. The key is to use debt strategically, always considering the cost of borrowing versus the potential return on investment. It's about making informed decisions and leveraging every financial tool at your disposal to build and protect your wealth. Debt, when used strategically, is not just a financial obligation but a powerful tool for building wealth. From leveraging investments and real estate to utilizing life insurance policies and enjoying tax benefits, the strategies the wealthy employ can significantly enhance financial growth. Understanding and applying these principles can shift your economic trajectory and illustrate that debt, when used correctly, is a key component of financial success. Remember, these strategies come with risks, and it's crucial to understand them fully before acting. Consulting with financial advisors and doing thorough research is always advisable, but once mastered, these techniques can help you leverage debt to achieve remarkable financial growth. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.